Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 24th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these videos is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Only economic data we got today was existing home sales. Remember, we had new home sales come in, gangbusters, and today we got existing home sales, which came in a lot lower than expected at 5.39 million units versus the expected 5.52 million units. Also, crude oil inventories expected to come in at a drawdown of 500,000 barrels. Came in at a build of 2.5 million barrels build. So as you can see, crude oil is down on the day, $1.50, almost near the lows of the day. It was down going into that economic data point, but with that build, it really lost steam and started selling off to the lows and below yesterday's lows. So my crude oil trades are working out quite nicely as of today. It seems like cats and dogs are living together with everything being down, gold being down as well, down almost $16, right on the 50-day moving average right here, which should act as a bit of support. But once it gets below this like 9-day moving average, that's really where it starts looking a little bit more bearish. So we've done that for the last couple of days and broken out of this range bound area that I've been talking about. So this is going to be a real key line in the sand now to see if that 50-day moving average can really hold off the bears, if you will. I'm in the camp that it's really going to want to trade down and start coming off just a little bit as people start to take profit. This is what I'm talking about. Even the bonds are down on the day, as you can see, just down a couple of ticks, but everything in the red, seemingly so, from the bonds to gold to crude oil to even in the equities. So there's a few stocks that are up on the day, but for the most part, it's a pretty bearish day across the board. The NASDAQ, as you can see, down almost 9 points on the day. Not terrible, but down below yesterday's low of the day. Remember, we made a historical new high yesterday and starting to come off just a little bit today. Equities, same thing in the E-mini S&Ps, made a historical high yesterday, but trading below yesterday's low right now. E-mini S&Ps /ES down just over 5 points. This is the breakdown of the E-mini S&Ps up overnight, pretty bullish, but as soon as the market opened for the day session, the market really started sliding, and the crude oil inventories did not help that at all. The only thing that I've done, I'm kind of just letting everything sit right now. Not a whole lot of volatility in the market, even though the VIX is starting to creep up just a little bit. Hopefully we'll get a little bit more movement to the upside in the VIX to allow us to find some more trades. This is FedEx, and I went and sold a call spread in there for lack of a better reason other than it's really showed some real resistance right up here in the 170 area. It can't break through 170. So the 169.5 area. So I decided to go in and sell a call spread in there, short duration, just looking to get a quick hit on this. I did the September, sold the 170, bought the 172.5 call spread. So I sold the 170s, bought the 172.5s to create that defined risk and collected 88 cents for that trade. That's about all I've done today. Kind of got a couple of things working that probably aren't going to get filled necessarily, but I just have them in there working just in case we get a bit of a sell-off. I want to take advantage of that. So Friday's webinar is going to be on the long call spread, so a bit opposite of what I did today. And the reason why I'm doing that is to take advantage of this low implied volatility that we've seen in recent months. And if implied volatility expands for us, that will be good. And if the market continues to push higher, maybe in a short squeeze, that'll be the time to take advantage of this call spread. All right, that's all I got for you guys today. You can go to protraderstrategies.com and sign up for that. Check out some of those other videos that I've done on just about every option strategy out there. All right, if you can't take that, take it easy.